the housing inventory and what that means for you in 2023. The housing market in 2023 is expected to be impacted by a range of factors, including rising interest rates, limited housing supply, and ongoing economic uncertainty. Despite these challenges, some experts predict that the market will begin to recover later this year with increased sales activity and more affordable prices for home buyers. Guys, interest rates have been a major factor in the housing market, with interest rates putting pressure on home prices after they hit record highs in 2022. However, rates have leveled off in recent months, and a recent uptick suggests that the market may be slowing down once again. One of the biggest challenges facing the housing market is a limited supply of homes. Now, many homeowners who purchased homes in recent years with these awesome COVID interest rates are staying put, and new home constructions have fallen for 5 straight months, contributing to a long-standing inventory problem. This tight inventory has kept home prices from declining, making it difficult for many home buyers, especially first-time home buyers, to access affordable housing. Now, despite the high home prices, economists are divided on whether prices will continue to slow down or even drop in 23. It will likely depend on where mortgage rates go, as well as other economic factors such as inflation and recession fears, that lovely word. Some experts predict that half of the country will offer discounted prices compared to last year, which we're kind of already seeing that, while others expect increased sales activity as home shoppers return to the market. Now, the median existing home sales price was up 2.3% to $366,900 in December compared to a year ago, but month over month, existing home sales continue to trend downwards, and total existing home sales have declined for 11 consecutive months. Low housing inventory remains a challenge, with housing supply stuck at near historic lows. The current sales pace puts inventory at 2.9 months supply, down from 3.3 months in November, but up 1.7 months from 2021. Experts expect low inventory to continue to impact the housing market throughout 2023, with single-family housing starts falling 4.3% in January and building permits down 1.8% compared to the previous months. Despite these challenges, builder sentiment has improved recently, with a leap from 35 to 42 in the latest National Association of Home Builders Housing Market Index report. However, builder confidence is still low, and more consecutive upticks will be needed before we see significant rebound in construction. Now, guys, will the housing market crash? Well, many economists predict that the housing market is more likely to correct itself from the double-digit percentage jumps seen in home prices in the past few years. So rather than crash, we think we're just going to see a small correction. After a big boom over the past 2 years, there will likely be no change nationally in home prices in 2023. And this is according to Lawrence Young, who is the chief economist at the National Association of Realtors. But some experts believe that homes in some areas could see sales and price growth, particularly in locations where home prices have remained affordable in relation to the median income. And despite the ongoing challenges facing the housing market, homeowner equity is still at the highest level in decades, and mortgage products have become less risky, which reduces the likelihood of a mortgage crash. Will 2023 bring more foreclosures? Well, foreclosures still remain below pre-pandemic levels, even with a steady rise in foreclosures after the expiration of COVID-19 foreclosure moratorium in September 21. Foreclosures were down 34% in 2022 compared to 2019, and government and mortgage industry efforts during the pandemic, combined with a strong economy, have honestly helped millions of unnecessary foreclosures. Okay, so we're kind of diving into a lot, but the foreclosure market in 2023, will it increase? Well, despite the rise in foreclosures that followed the end of COVID-19 foreclosure moratorium in September 2021, the number of foreclosures still remains lower than pre-pandemic levels, according to the year-end 2022 U.S. foreclosure market report by Adam Data. Foreclosures actually in 2022 were down 34% compared to 2019. In December of 2022, foreclosure starts saw a 72% increase from the previous year, but a 1% decrease from November to December. The government and the mortgage industry efforts during the pandemic, along with strong economy, have helped prevent many foreclosures, says Sharga. Now, additionally, many homeowners, even those who struggle to make payments, have seen a significant increase in their home's value, giving them positive equity in their homes. Unlike during the 2008 housing crisis that was awful, this has allowed borrowers in foreclosure to refinance their homes or sell them for a profit. So that Sharga believes that this trend will continue in 2023. I get this question often and I get it a lot. Should I buy a house this year? Well, the decision to buy a house is a personal one, and honestly, it depends on your financial situation. Before making a purchase, you should use some type of mortgage calculator to estimate your monthly housing costs based on your down payment and interest rate, of course. This trying to predict the market is not wise, and I don't recommend it to anybody. But I always preach this, and I always say this: speak to a real estate professional and a loan officer to see your options and to see what makes the most sense for you, because it's not going to be like the 2008 financial crisis. So experts suggest buying a home based on your budget and needs rather than waiting for lower prices. I also say this often. If you find a home you love in a desirable area that fits your budget, it might be the right choice for you. Now, however, making too many sacrifices to buy a home can lead to buyer's remorse and the need to sell the house later. So here are some tips for buying a house in this housing market. Start by setting a budget and sticking to it. As I always say, buyers right now are still facing somewhat elevated prices depending on the area that you live in, and mortgage rates are close to 7%. Right now, it's a seller's market, so buyers should be prepared to face some challenges, according to Rita Tayanaka, owner of Cost to Canyon Brokerage in Orange County, California. There is a disconnect between buyers and sellers, with buyers wanting to lowball and sellers wanting last year's prices, which that's my favorite part right now. So what are some tips on selling a home in today's market? To have a successful sale, it's crucial to find a listing agent who is knowledgeable about the area and comes highly recommended. I cannot recommend this enough. A good agent will help you price your home competitively and handle questions and offers from prospective buyers. Tayanaka warns sellers who continue to demand 21 and 20 prices, as a number of homes falling out of escrow recently is a cautionary tale. Even though the market may still favor sellers, it's in the best interest to present your home in the best possible light. Decluttering, organizing, and cleaning your home can honestly go a long way. Even if you don't have cash for renovations and repairs, a clean and organized space gives buyers a chance to see the potential of your home. Guys, thank you so much for tuning in to this week's episode. I hope you found some value. We really spent a lot of time in this week's episode because, well, we do in all of them, but this one is something that's close to home because I get a lot of these questions asked to me. So I just wanted to break it down in the easiest and most understandable way so that you guys can digest it. As always, if you guys have any questions, please leave them down below in the comments. We do this for you, and your questions are greatly appreciated. Good, bad, whatever they are, let us know. Thank you so much, and we'll see you on the next one.